My guest today is Andy Schafer, who spent 24 years as an actuary at Principal Financial Group pricing disability insurance risk before stepping into his current role overseeing pricing and product development across Principal's specialty benefits divisions. For more than 2 decades, his job was to calculate the probability that working people would lose their income and the cost to replace it across millions of insured lives. Today, we're going to talk about what that vantage point taught him, what most employees still must misunderstand about workplace benefits, and why Principal is leaning into income protection education. So, welcome, Andy.
Yeah. Well, thank you. Thanks for having me, Jamie.
Sure. It's great to have you here. So, you've spent your entire 28 years at Principal Financial Group, starting in 1998. So, what first drew you to work in this area, pricing insurance risk?
Yeah. Yeah. So, well, if I'm being honest, I was always really good at math growing up, right? My dad was a high school math teacher, so that's a big part of it. And so actuarial science is something that I encountered or discovered when I was in college. And then upon graduating, I met the Principal Financial Group, came here, and as you noted, I've been here my entire professional career. So for me, it's an area of interest and something that lines up really well with well what I think I'm good at least, Jamie. So, but yeah, that's kind of where my interest came from and kind of how I discovered the Principal Financial Group.
Is it what you expected, like when you were in college and you heard, here's what actuaries do? Is this something, did it sort of meet your
I,
expectations, or is it different than what you expected?
I don't know I think everybody has some sort of preconceived notion of what corporate America is going to look like when you're in college. And I don't know. It's been so long since I was in college, right? Do I remember did it meet my expectations? Probably, right? And I say that now that I've been doing this for 28 years, but yeah, I think it's right along the lines of what I expected with I guess the benefit of hindsight now.
So, for somebody who's never even met an actuary or doesn't even know what an actuary does, can you describe in plain language what does an actuary actually do and on a day-to-day basis?
Yeah. So really you can think of what actuaries do. In each kind of area of actuarial specialty is a little bit different, but the way I think about it is for this particular business that we support, you're essentially um, looking at information and then kind of translating what I'd call the law of large numbers into something that an insurance company can use to price. So that's not really plain language. So think of it as we observe, you mentioned it, millions of lives that Principal covers. And so actuaries take a very close look at, in this case, the number of people that become disabled over the time that we insure them and the number of people that recover. So those two things are very important to determining what the cost of insurance should be for disability income or for income protection, as I like to call it. So you look at incidence rates, you look at recovery rates, you look at interest rates, and then those things are big drivers into how much you you charge for insurance. And that's really what actuaries do. They determine how much insurance should cost.
So, I've seen some changes. I've been doing this also 3 decades, and maybe you can tell me from an actuarial standpoint, are there certain risks that have changed in the income protection field? So, for example, I've noticed when I first started, there was no such thing as a mental nervous limitation. That
Right.
seems to be new. For a while, we had unisex rates. Now it's only male, female. Have you noticed changes of things happening in society that have changed income protection risk?
Uh, I mean, the biggest thing that happened relatively recently that changed the risk profile was the pandemic, right? We all lived through it. We all spent, months, years at home working, trying to stay away from each other. And on the back side of that now, what we as income protection carriers or disability insurance carriers are trying to figure out, and what the actuaries are trying to figure out is what should the cost of the insurance be going forward? So if you think about the world we live in now, what you and I are doing right now, Jamie, right? We don't have to get together to have this conversation. We can do it virtually, right? The same is true for the way people work. And a lot of our listeners, I'm sure, work in a hybrid environment or don't go into the office anymore. Um, so when we think about how we insure people, the days of everyone going into the office to work are essentially gone, right? It doesn't
Mm.
mean that there isn't a place for in-office work. I'm in the office right now, but there are millions of Americans that now work remotely or work in a hybrid fashion. And so what that means for disability insurance or for income protection is that in situations prior to the pandemic, people might have had to go into the office to work. And if they couldn't, then they would file for disability, right? There's all sorts of examples where this happens. A good example is someone that is diagnosed with I'll call it stage 2 cancer, right? They, before the pandemic, that person started to go through treatment. They don't feel great. They might lose their hair. They certainly don't feel like driving. They don't want to be around other people in the office. And so if they can't come into the office, short-term disability, right? And if the condition's worse, maybe it turns into a long-term disability. Well, now the world's different, right? A lot of employers have this technology set up, and employees want to work. They still want to contribute. They want to add value. So it's much easier now for employees to work on a part-time basis, work on a residual basis. So they're not filing as many claims because they can work remotely. And then the same thing is true for people as they begin to recover and start to feel better. They're ready to return to work. Well, in a lot of cases, they've been out for a while. Maybe their employer has replaced them with a new employee, and there's no place for them at their current employer. But they live in Chattanooga, Tennessee, or name the place. Their family's there. They want to stay in that geographic location, but they can't find a job. The world we live in now, we at Principal can help them find a job almost anywhere, right? They can do
Mhm.
the same thing in Seattle. We help them find a job in Seattle. They work remotely. That helps them get back to work. It helps them contribute. Those two things help people get back to work or help people stay at work, lowers the cost of income protection for everyone, which is a great thing.
So, yeah, you mentioned at the end it lowers the cost. So,
Yeah.
has pricing also changed as a result of these changes? Have you noticed?
Absolutely. Yeah, absolutely. The pricing for a lot of our insurance offerings has changed materially. The kind of the dynamics there that I described, being able to stay at work or return to work, obviously apply differently depending on the occupation, right? If you're in maybe a heavy blue collar or gray collar job, it's probably more difficult to work remotely, like I just described. So the impact is different depending on the industry or the
Mhm.
occupation. But in a lot of situations, there's no debating the fact that the cost of insurance is coming down because of the phenomenon that I'm describing.
I've noticed that a lot too. We work with a lot of like solopreneurs, entrepreneurs, people
Yeah.
do consulting and they work from home. And before the pandemic, if they worked from home, some companies wouldn't even allow them to get a policy. Now
Sure.
it's almost expected that they work from home.
Absolutely.
But is it
Yeah.
harder for an underwriter to kind of, or when it's the time of claim to differentiate how much they're able to work or not because it sort of bleeds through with being at home?
At the time of claim, is that what you asked, Jamie?
Yeah, yeah. At the time of claim, is it difficult to discern how much they can or can't work?
Yeah, I mean, the policies generally trigger the claim triggers off from accident or sickness, right? So
Mhm.
we're generally looking to see if people are, if they can't work due to accident or sickness. So using that initial lens, I don't think the claim evaluation is that much different, right? But
Yeah.
as you know, there are also provisions in the contract that look at how much of your income is lost or how much of your income you can't earn anymore. And so that does become a bit more challenging, but uh,
And then from the insurance perspective, insurance company
mhm.
perspective, you had mentioned helping them find a job in Seattle or those types of things. Are the insurance companies more likely to try to make sure the person is getting back to work or help them get back to work? Has that
Yeah.
changed?
So it's changed because of the dynamic I described, right? But what you're hitting on is something that that we do at Principal and all insurance companies do that I don't think gets enough airtime or spotlight, and it's the fact that we have significant resources that we use to help people get back to work, right? To consult with them, to talk to them at the most difficult moments in their lives, right? We talk to a lot of people that are on claim. They're really hurt or they're
Yeah.
really sick. And these the people that do this, I could never do it, Jamie, right? Like they're
Yeah.
so good at this. They're so empathetic, the way that they talk to our customers, our claimants, that they help them. And so it's something that when I watch it, when I see it, when I've seen it over the course of my career, I'm really proud that we have people that can do that, that can help people get back to work in different ways. And this has opened up the playbook for them, right? Now
Yeah.
there's more options to help them so that they can help more and more people get back to work, live meaningful lives, contribute in the way that they know they can.
Can you think of a specific or an example or an instance or a story of when this happened?
Yeah, I mean, we hear a lot of stories about this from our claimants, and it comes in the form of just the thanks that we get for being there. It starts with just being there to listen to them, to check in on them, to see how they're doing, um, and then if it works and if it works well, people thanking us for helping them get back to work. In some cases, we're rehabilitating them to work in a different occupation, right?
Hmm.
Something might have happened to them physically or cognitively that does not allow them to work in the occupation they were in previously. And I think in a lot of cases, without the support that Principal provides or that other insurance companies provide, it's really difficult for an individual to figure out what's going to be next for them. We
Yeah.
are totally here for them to help them through that, figure out what the next thing in their life is going to be. And that's what our return to work specialists here at Principal excel at doing.
Yeah, I have a client. I talked to her just last week. She was in a really bad accident and she had a principal policy, and they were
Okay.
so helpful and so compassionate. She was so grateful. She's in her mid 40s and she told me, I can't tell you how many times I wanted to drop this policy. It was expensive. I'm so glad I didn't
Yeah.
because her type of injury was just so traumatic that she can't go back to her job.
I'm glad
So,
she didn't, right? I'm glad she kept it. That's a
yes.
great story, Jamie.
Yeah.
A lot of the stories that I've heard over the years tend to revolve around people that it's not just them, right? There's a family around them. They have a spouse, they have children, they have people that are
Mhm.
depending on them, and it's already you're already feeling like you're in dire straits when you become disabled, but when you have a whole family unit or people that are counting on your income to support them, um, it can be really scary. And so the thanks, the accolades that we get, oftentimes come from, wow, you helped save my family,
See,
right?
what
Not
I
just
find so
me, but you saved
interesting
my
talking to
family. And
you is,
that,
yeah, what I find so interesting talking to you is you're typically, behind a desk or behind a computer working on the
Mhm.
numbers, but you really see that human element for what you do and the difference that it
Yeah.
makes for people.
Yeah.
So I find that
Yeah.
really interesting.
And a lot of that is, talking to our claim specialists here at Principal, right? The stories that they have and just better understanding their role and how they help so many people.
So when you worked as an actuary, you probably look at patterns over time. What was the most surprising pattern you saw in the disability claims data?
Most surprising path. Yeah, that's a really good question, Jamie. Um, I I don't know. I think the depending on the risk, there's a big difference between short-term disability insurance, between long-term disability insurance, and even individual disability insurance. I think the thing you learn very quickly, particularly for longer term risks like long-term disability or individual disability, is really how few people actually file a claim, right? So for LTD, long-term disability, or for individual disability, about 3.5 to 4 out of every 1,000 people that we insure actually file a claim, right? And
Really? It's
so,
that
yep,
low?
yep, it's low,
Wow.
about 3 to 4. Three is pretty low, four's on the higher end, but that's the average number of people that go out on claim. And so, um, as a result, when you're looking at information to try to figure out how to price, you have to look at your experience over a long period of time, right? Typically 5, even better if it's 10 years. You're looking back to see, okay, we've insured, 20 million people over this time period. How many of them have actually filed a claim? How quickly do they recover? Things like that. So it isn't that many people that actually file a claim. And I think that's where income protection, that's where the challenge for us as an industry comes in, because there really are relatively few people that need the coverage when you think about it that way. Everyone, you know, should think about income protection, in my opinion, but only 3 to 4 out of 1,000 people actually file a claim. And so thinking about it from from the consumer's perspective, I think there's a need this, right? Like I'm invincible. I'm not going to need the coverage. And that statement's actually true for a lot of people, but it's a significant risk to not have it, a risk that principal can take off the table by providing you insurance coverage.
So I would assume that that lower number is for policies that were underwritten, because if you're able to get a policy and you go through the underwriting, maybe you are a lower risk. What is the difference in an individual policy that's been underwritten versus an employer
Yeah.
sponsored policy in
You'd
terms
be
of claims?
surprised. Yeah, you'd be surprised. It's actually not that different. It's in the same range. You're right, though. An individually underwritten policy does have low, all else being equal, it has lower incidence. It has a more appropriate premium to charge for that customer. But when you think about what happens through the employer on the group side, the underwriting it's more group underwriting, right? Meaning that we don't, underwrite every individual specific person that works at a 500 life company, right? We don't go through that, but we know that those people are all actively at work. And
Mhm.
so they're getting the coverage and the employer pays for the coverage in most situations, right? The employer's paying for this coverage. And so there isn't in the business we call it anti-selection, right? There isn't very much anti-selection at a group level because the employer provides it, the people get it. They're not necessarily thinking about whether or not they need income protection. The employer just provides it for them, which is a wonderful benefit for employer to offer when they're willing to do so.
So, when we come back, Andy walks us through what really happens inside a household when a paycheck stops without warning, from the data side and the human side. Okay, I'll come back. 25.16. Okay. Andy Schafer has spent nearly 3 decades at Principal Financial Group looking at what an income loss actually does to working families. First, as an actuary pricing the risk, and now as the executive responsible for the products built to absorb it. So, that dual vantage point is where the next part of the conversation is. Okay, so you have spent decades looking at what happens to households when an income suddenly stops. What does that actually look like in the data in the stories that you hear?
When someone's income stops and is replaced by the policy, is that what you're asking,
Yeah,
Jamie?
so like from your vantage point, when somebody goes out on claim,
Yeah.
what does that look like in the data, like and in the stories that you hear?
Yeah. Well, if you have coverage, right, then principal is there to assist, right, to provide income replacement, and so if you think about kind of what you do day in and day out when you work, there's a whole host of expenses that you have. I mean, you have clothing to wear, you have to drive to work, right? You buying lunch, things like that. When you become disabled, you're at home. Now a lot of those expenses are different, right? You still have responsibilities, you still are making mortgage payments, you're still making utility payments, you're still supporting your family, but the income that you now have from disability insurance policy is admittedly lower than it was before while you were working, and that's very much by design. And we talked about that a little bit earlier, Jamie, right? That there's going to
Mhm.
be a lower income replacement threshold, but again, that's by design because when you're disabled, typically your expenses are lower. The other reason that the income replacement is lower is because it provides a bit of a constant incentive to return to work, right? Or to kind of look for something else to do. So from an insurance company perspective, the policies are designed to replace a portion of the income, but not all of it.
Mhm. Yeah. So from your vantage point, what are you seeing as the biggest risks for somebody to file a claim?
The biggest risks for someone to file a claim.
Yeah, like because you're looking at it from the data, you're probably looking at what's what's going to cause the most likely claims, correct? Like when you're looking at the data, somebody applies, you're looking at all of the risks.
Sorry, you
What are
broke up.
the
Sorry, you
biggest
broke up there a
causes
little
of
bit.
claims and what are the biggest risks that people have?
Yeah. Yeah, good question. So I think there's a when you think about disability insurance or you look at the advertising or you look at the marketing, you see hospital crosses, you see people in wheelchairs, you see people on crutches. That kind of conveys an image of accident, right? That this coverage provides protection against accidents, and it does. But accidents are only 10% of the disabilities
10%.
that we cover.
Really?
The other 90% are sicknesses, right? And so I think what most people significantly underestimate, this is kind of another thing I've learned over the course of my career, is that people significantly underestimate the probability that they'll become sick, right? And so when you kind of go through your internal calculus of do I want to buy an income protection policy or do I need income protection? I think there's a lot of people that are thinking, well, if I get hurt, I can just work through it, right? I can work from home. I'll be fine. I do all my work on a computer. It'll be fine. And that 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 is true for a number of people. But back to my previous point, when you get really, really sick, and you're impacted physically and more importantly, cognitively, in a lot of situations, you can't do much of anything, right?
Hmm.
It's hard to kind of stay awake for a while when you're really sick. It's hard to think. It's hard to concentrate. And working in that environment can be excruciating for a lot of people, which again, that's where this coverage can step in and help, even if it's not completely debilitating, but you can work a little bit like we talked about before, Jamie. Now the our policies will accommodate that, right? We can provide partial income replacement in the event that you can do some work.
Hmm.
So that's, to get back to your question, I think that's the part that I think most Americans underestimate is the probability that they're going to become really sick, especially as they get older, right? As you get
Hmm.
older, you get into your 50s, the incidence of sickness or of, we call it a musculoskeletal disability, but it typically involves something, physically that the impacts of old age, right?
Hmm.
Like those can become disabling events as well that are, um, are they an accident or a sickness? They're somewhere in the middle, right? But it's father time kind of catching up with you, and you can't do the things that you could do when you were 25.
Do you think advances in medicine are impacting this? So, for instance, something that might have just, years ago, maybe you would have just died if you were diagnosed with something. Now it keeps you alive. Does that drag on a disability?
Yeah, well, absolutely. Advances in medicine are happening all the time, and wonderful advances in medicine. If I think back to 20, 25 years ago, the incidence rate or the I'll call it the cost of insurance related to cancer was a lot different than it is now, right? It's significant advances in cancer research have helped people live longer, have helped people combat the impacts of cancer. And we see that in our data too, right? Like cancer is still it's still a big deal, right? And when someone gets cancer, it's a terrible outcome for that individual. But modern medicine has helped so much, so many people that are battling cancer.
Yeah.
Yeah.
So, so one of my questions is related. The big topic right now is AI, and
Mhm.
you work in data and working with numbers. How is AI going to impact the disability insurance world? And
Yeah,
then,
get out your crystal ball here, right? And figure out
yeah,
what's going
I'm
on.
curious from your perspective.
Yeah. Yeah. I think you can read a lot of things out there about AI that are scary or fairly draconian, right? Like it's going to take away all these jobs. It's going to, cause all these people to be out of work, all these white collar employees that did these things. There won't be any place for them going forward. And on the margins, that will probably happen in some spots. But from my perspective, Jamie, what I think is going to happen, and we're starting to see it already, is that these AI tools, these AI solutions, will just become more a part of how we work day in and day out, right? So think about, I don't know, 30 years ago, there was no internet, right? And people had jobs. And now when we work, using the internet is just a part of how we work. Same thing with our phones, right? Now everybody's phone is a small, powerful computer or it's a personal like world atlas, right? You've got a
Hmm.
world atlas
Yeah.
in your pocket all the time, which is amazing. That technology wasn't here in the past, and now we use it day in and day out. Did it take away jobs? I mean, I'm still working, right? People are still working. It just changed the way that we work. I think the same is and will be true for AI. And it will just help all of us work smarter, help all of us work more effectively, more efficiently over time. And so, yeah, it'll change the way that we work, and there will be some jobs that don't exist in the future, but I think it'll be gradual over time, and the way that we work will change, and the jobs that exist today that don't exist in the future will become something different.
Do you think AI will take over some of the actuarial work, just crunching the data,
It,
or will
it
it change the way that you work?
Yeah, I think like a lot of occupations, it'll help actuaries become much more efficient, right? It'll
Hmm.
help them, actuaries excel at analyzing extremely large volumes of data very quickly. And these tools help make that even happen even faster. So, which is, if I'm thinking about it, that's a great outcome for a consumer because
Hmm.
from a consumer's perspective, now we can more appropriately reflect the cost of the true cost of insurance more rapidly to the customer, right? Like if as things are improving, we can bring down the cost of insurance. As things are deteriorating, we would increase the cost of insurance slightly.
Yeah,
So,
that's what I was thinking. I was thinking that by analyzing the data more efficiently and faster, they may be able to price things at a faster pace because
I,
typically in the insurance industry it takes years when they start to notice, wait a minute, like you had mentioned before, people working from home, that's not a big risk anymore, but all of the data
yep,
can prove it. And now maybe with the AI and moving it along faster, they can be more nimble with their
yeah,
pricing, which benefits the consumer.
absolutely. And it helps us identify trends much more quickly, right? Trends in the data that we're seeing, or things that are emerging, or things that are improving. Then we can reflect that in the cost of insurance much more rapidly.
Yeah.
Yep.
Okay, so now we're going to kind of switch gears. So Principal joined the Council for Disability Insurance Awareness last November, the CDIA.
Yep.
Are you familiar with that? And what did joining that represent
Yeah.
for you personally beyond the company announcement?
Yeah. Yeah. The Council for Disability Income Awareness is the organization. Their website is the CD www.thecdia.org. Yes, I'm very familiar with the organization. Principal is a member. We joined the Council for Disability Income Awareness in October of last year. We're a member of this organization So are a number of our competitors. So are a number of the reinsurers in the marketplace, consulting firms, brokerage firms, GAs. There's a whole bunch of members, companies that are part of the CDIA. I serve on the board of the CDIA to represent Principal. And the organization is devoted to simply providing an unbiased source of education for millions of Americans to learn more about income protection, how it works, um, what it can do for you, the importance of income protection. And so I'm pretty excited, pretty proud that Principal's a member of this organization. In as a member, we're lending our thought leadership, we're lending our voice to this organization to try to help make the educational message that's coming out from the CDIA as effective as it can be. So for those of you listening, this is a great place to learn more about income protection in a way that is designed to be unbiased. It doesn't promote any one particular insurance company, any one particular solution. It's education for all.
And I think that's something kind of special about the insurance industry where people from all different companies and competitors, they all work together to really help the consumer. So it's not seen as contentious or anything. Everybody has a mission to help spread the knowledge and spread the
Yeah.
awareness.
Yeah. Well, I mean, hey, I want more and more people to buy our policies, to buy our income protection, to buy our disability insurance, but there are plenty of other solutions out there that can meet the needs of Americans. And if you're doing that to protect yourself and take the risk of loss of income off the table, that is a great thing.
So, your research shows that 40% of Gen Z workers report a lack of benefits education. So, if you had 5 minutes with a room full of 25-year-olds, what would you tell them about protecting their income?
No, boy, this is tough, right? Kind of you're getting back to the point I made earlier about, especially when you're in your 20s, there's a air of invincibility that comes with where you're at in life, right? And so um there is a really good chance, probably I think 1 in 4 is the number that the industry puts out there, 1 in 4 chance that you're going to have a disabling event occur at some point during the course of your career. And so I'd probably start with that, right? The fact that it may not feel like you need it right now, but at some point in your life, this income protection can really, really be helpful at a time when things don't feel great. And again, I realize that's hard to envision when you're 25, but that is the reality that this could come into play at some point in your life. And purchasing protection when you're 25 is much less expensive than it is when you're purchasing it at 55. That statement is true for disability insurance. It's equally true, even more true for life insurance, right? As you become older, the chance that you become disabled or the chance that you die is much higher. The cost of insurance goes up as you age. So lock it in when you're 25, right? Would be part of my message.
You're also probably a lot less likely to have any kind of health conditions to keep you
Absolutely,
from getting
right.
a policy. So just to really,
Right.
in your 20s, yeah, just protect the insurability. So someday when you are in your 40s or 50s, when you actually need it, you have it. You
That's
can't go out
true,
and buy it.
right?
Yeah.
Yeah, that's true. The underwriting process that you're describing looks a lot different. In fact, if you do get to the point in your life where you are hurt or you are partially disabled, in some situations, unfortunately, you may no longer be able to purchase income protection or purchase life insurance if the risk is too high.
Yeah. So
Yeah.
what would you say to those people that just say, you know what, I have it through work, I'm taken care of. What would you say to those Gen
Yeah.
Z?
Take a close look at your policy, right? Talk to if you're at a larger company, talk to someone in your HR department that understands the benefits that are being offered through the employer. If you're at a smaller company, you should be able to take a look at your benefit summaries, see what income replacement provides. As I mentioned before, I think the biggest surprise to a lot of people that have employer sponsored policies or that my employer's taking care of me when they actually file claim or when they go out on claim is just how much lower the income replacement is than the income they got from their salary. And so is that enough is a question that everyone should be asking themselves or talking to your financial professional about, right? To determine if this is enough income protection. If it's not, then that's where individual disability insurance can come in, right? You can go through underwriting to provide additional income replacement. And in most situations, get your income up as high as 70% of your pre-disability earnings. So if your employer policy doesn't provide that much coverage, or if there's a maximum in place, as you mentioned before, Jamie, it can really limit your income replacement. Consider some individual disability insurance to supplement your income replacement.
And I think somebody like you're more unusual where you started at one company and stay there your whole career. I think for a lot of these young people now, that's a lot less likely. So I think
Yeah.
having something that's portable, so if and when they leave, they can take it with them because you don't want to be stuck at an employer because you had a change in health.
Yeah.
Maybe you want to start your own business or something, but you have to stay to keep your benefits. That's
That's
not.
a great point. Those individual disability policies will go with you wherever they're completely portable. And then I think the other part of that for listeners or for employees that have moved from company to company, don't just assume that you have employer sponsored income protection. Your new company may not have the benefit that your previous company did. And I know, I've seen some of those situations where people are assuming they had the same coverage they had at the prior company and then it's not there. And that's not a great outcome either.
Exactly. Okay, we're going to take one more break.
Okay.
Three. Okay. Um, so we are back with Andy Schafer, Principal Financial Group, an Iowa actuary who spent 28 years inside the numbers behind income protection. So next, we are just going to get into just a quick round. So where we're going
Okay.
to just ask you a bunch of different questions. Just write down the time at 44. So these are just, we call these sound bites. So just tell me the first thing that comes to your mind. So let me just pull this up here. I apologize. Let me just go here. All right. So, Andy, you have priced risk for 24 years. Give me one number. What is the probability that a 35-year-old professional will experience a serious income interruption before they retire?
It's about 1 in 4, 1 in 5.
So, and then maybe just say it all in a sentence. One in,
Yeah, there's about a 1 in 4 chance that a professional will have some sort of disabling condition throughout the course of their working lifetime.
what is the one thing your peers inside the insurance industry get wrong about how to educate the public on income protection?
We try to scare people into purchasing disability insurance instead of highlighting the benefit that comes with it and all the good that comes out of the coverage that they provide. And so we lead with too many scary statistics and numbers, and we just don't talk about what the insurance actually does.
If you could put one sentence about income protection on a billboard that every working professional in America would drive past on their commute, what would it say?
Oh boy. I
Just a
would probably say something else.
one-liner.
Yeah, yeah. I'm going right back to the scary stuff, right? Like, what would you do? What would you do if you were too hurt or sick to come to work? Honestly, it's probably something more along the lines of if you can't work, what would happen to your family, right? Or what would happen to the people that you love? Could they continue their life? Because that's what's really meaningful is the impact that it has not just on you, but the other people in your life.
Absolutely.
Yeah.
So, what is the most uncomfortable truth about how little working professionals understand the benefits that they already have?
That when the unforeseen happens, it's too late,
Yeah.
right? That they don't have the protection, and then when they need it, it's too late, and there's nothing there. That's me. That's the most uncomfortable truth, and that it could be disability insurance, it could be life insurance, it could be Heck, it could be retirement insurance, right? Like you didn't plan well enough for your retirement. All those statements are true about insurance, right? You're purchasing it for the day when you might need it, and if you don't do it and that day comes, it's too late.
I know it's interesting how a lot of people find out about their insurance policies. That's when they get their lesson in insurance is when they need it. So as
Right.
opposed to prior. So,
Right.
Andy,
Yeah.
thank you so much for all of the clarity and candor. Listeners, that was Andy Schafer of Principal Financial Group, a 24-year actuary turned executive who has spent his career thinking about the math and the human reality of what happens when a paycheck stops. So, the takeaway worth sitting with is that gap between what the employees have access to and what they actually understand is usually wider than they realize. And closing it starts with one honest look at the benefit package that they already have in front of him. So Andy, I really appreciate you coming on. And like I said, I find what's so fascinating is somebody who sits and looks at numbers all day is actually looking at the human element and the importance of what happens when somebody actually files a claim. And I think that's really unique and special. So
Yeah.
thank you so much. I really
Thanks,
appreciate it.
Jamie. Thank you so much for having me on.
Absolutely.